Well, in his much awaited and latest newsletter, Greed and Fear, Chris Wood of Jefferies has written quite in depth about two important topics. Number one, he's spoken in depth about the US presidential elections and the likely outcome. He notes that a lot of the polls are now showcasing the fact that Joe Biden is in the leading position against Donald Trump. However, what he is saying is that he's a little worried about how the rising number of cases of coronavirus is something that could have a potential impact as far as the outcome of the US presidential elections is concerned. But closer home, coming back to India, he's made quite a few significant positive changes as far as the Indian portfolio is concerned, and he has written quite in depth about the entire India opportunity as far as equity markets are concerned. Number one, he's spoken about how PM Modi's continuing remarkable popularity is at this point of time actually allowing him to refocus on structural reforms as far as the economy goes, and these structural reforms, Chris Wood expects, will be quite long-term positive. Now, what he is saying is that the Indian economy has returned to normalcy quite significantly post the disastrous effect that was seen or that was felt after the lockdown-aggravated Q2. What he is also saying is that the Jefferies India Economic Activity Index is now running at almost 96% of its pre-COVID level, and he says that it continues to look as though the virus caseload has actually peaked in India, looking at the number of daily rising cases. What he is saying, and this is something that he's spoken about quite in depth, he speaks in depth about the financial market in India. Now remember, recently Jefferies India Equity head Mahesh Nandurkar actually raised the overweight in financials and downgraded their stance in IT to a neutral. So on the back of that particular development, Greed and Fear actually has written quite in depth about the financials in India. He says that they continue to have concerns about an NPL cycle in consumer loans. However, what he feels is that the home financing story is quite straightforward, given number one, the affordability courtesy of much lower interest rates, and number two, what he is saying is that further positive for the housing market has been cuts as far as the stamp duty is concerned in Maharashtra. Within this particular space, he likes HDFC. He believes that HDFC is the standout name and looks poised to take significant market share. In fact, what he has done to back his words with action, he has gone ahead and raised the overweight position in their portfolio in HDFC by almost 2 percentage points. Now, what is very interesting and what is very exciting is that Greed and Fear has actually raised and increased their overweight in India by almost 1 percentage point in the Asia Pacific ex-Japan portfolio, and this further shows that they are quite divergent and they are taking quite a divergent stance to the model portfolio. So again, some positive news flow coming in for India from this particular edition of Greed and Fear.